Yeah.
Welcome everybody to OEG's latest webinar. We're going to take the opportunity to do a mid-year check-in, given that we're now 6 months and counting into 2025. To do that, we've assembled a panel of experts to talk about all manner of things. I think we can promise you a wide-ranging discussion today. I'm joined, of course, as usual, by John Grant, OEG's Chief Analyst. Welcome, John.
Hello, Deirdre. Good to be here. What a way to spend the lunchtime.
I know. Well, it's lunchtime for us, but it's not for our guests today. So a very early good morning to Courtney Miller, who has come back. I was looking back, and I think actually it was almost a year ago, if not slightly just over a year ago, Courtney, that you joined us last. So welcome back.
Thank you. That's about how long it takes for people to forget.
Well, yeah.
But coffee is in hand. I'm ready to go.
Good. And we'll not leave it so long the next time. And also welcome back to Gary. Gary's I don't want to say serial panelist on our webinars. But we're delighted to have Guy back to give his usual fascinating insights on what's happening in Asia and the sentiment and the market trends in Asia. So welcome back, Gary.
Hey Deirdre, hey John, hey Courtney. It's good to be back.
Perfect. For those of you who don't know me, my name's Deirdre. I am a partner at Midas Aviation and have been coordinating these webinars with OEG for some time now. One day we'll do some stats for our regular listeners, just to tell you how many we've done, but it's a lot. And we look forward to them. As John says, what else would we be doing at lunchtime on a Thursday? And apologies to those of you who normally join us on a Wednesday. We switched it up just to see if everybody was paying attention this month. I think next time we'll go back to a Wednesday. Okay, let's just give a quick overview of what we're going to talk about. So really, we're taking a bit of a look at some of the biggest markets in the world today. We're going to have a sort of look around Asia and probably focus on Southeast Asia, given we've got Gary here. We'll be looking at Japan, which is attracting more and more tourists by the day. Thailand's not having so great of a time in capacity terms, so we'll have a look at that. And Vietnam is certainly growing apace at the minute, so we'll have a look there. And then, of course, we've got Courtney here to help us navigate what's happening in the US. There's a challenge for you, Courtney. We'll talk a bit about the domestic market and, of course, international, and I'm sure there'll be plenty of other things to talk about, as has been the way of things this year. We were just reflecting as a panel before we went live that this has been an incredible year, both in terms of the industry, the global economy, and all of the varied things that have happened in just the last 6 months. So I can't promise we'll do all of those things justice, but we'll probably refer to them and see if we can try and make sense of or have a view on what all of this might mean. Okay, let's jump in. First slide, the usual one that those of you who join us regularly will know that we like to just sort of check in on. So we've added a little bit of dimension to this month. So global capacity has been tracking around the 3% mark year on year. Slowed down a little bit this month when we updated the data for the rest of the summer season. So we were at 3.2%, down now to 3.1% against 2024. And of course, if growth had carried on, that's our dotted green line, in the same at the same rate that it had been going pre-pandemic, we'd be sitting at something like capacity at 625 million seats this month instead of the 557 million that we're at. So significant gap still there. John had me calculate what the equivalent lost daily flights would be this month. Almost 19,000, which is quite a stark figure, isn't it?
That's why I asked you to calculate it, because I think it works better as a unitary number. Yeah, it's like mind blowing when you think about it, how much capacity we have lost, and that's nearly in every market around the world. You know, from the rapidly emerging Asian markets where Gary is, to what had been a booming US market for the last couple of years, and of course in Europe. So absolutely, and of course 25's line continues to reflect the supply chain issues that we have, and if they were not around, then there'd obviously be a few more million seats per month in most markets. But that's, even though it's improving, it's not going to go away for the next couple of years. And Michael O'Leary last week in his or on Monday in his Ryanair quarterly results had great delight in telling everyone he expects it to be here until the end of the decade. But it doesn't matter, because he's got 30 spare engines and his Boeings are being delivered as expected, 29 in the next year. So some airlines are sitting pretty and doing well. Others are still grappling with sand in their engines, shortages of maintenance resource, and of course, in some cases, having to completely readjust their schedules.
Yeah. Just on talking about adjusting schedules, we also wanted to take a look at, we were kind of reflecting the other day on, the perennial seasonality of the industry. And we're kind of curious, if we looked backwards, to see, well, how much has that seasonality changed? Has it flattened? We sort of have been talking a little bit in the, I guess, the last 6 months, maybe a bit longer, about, are we seeing a shift to more people holidaying, for example, in the shoulder seasons, May, June, September, October times. So we thought, just out of curiosity, we'd look at how capacity is distributed across a year. This is just global. And so maybe there's a bit of a caveat there around if we dug down into some of the regions, it might look a little bit different, but just a snapshot. So what we've got here is month by month across a year, and the percentage that month accounts for of the annual total, going back to 30 odd years, 1996. And in sort of intervals thereafter. And I kind of wasn't expecting to see a concentration of capacity in July and August, if I'm really honest with you. So that was a little bit of a surprise. And maybe we do, in future, maybe we'll dig down a bit into more of that. But any passing thoughts?
I mean, you see almost a 30 million monthly step change from June into July and August on a global basis, which is, staggering. Really, first half of that is probably US domestic capacity for the school holidays there, and then into Europe, etc. It's more of I think it's more pronounced from the Northern Hemisphere perspective.
Yeah.
But it's not going away, is it? I mean, it's extremely sticky, and that. I think that highlights the big issue that the whole tourism sector has, is however you try to spread out capacity and demand, if there are some drivers that just make it almost impossible for some markets. I mean, in Europe, school holidays are firmly fixed to 2 weeks of July and the whole of August. So it's very difficult to see that smooth out. I guess the other thing it tells us is February is a dog month everywhere. If you want a cheap seat, February is a month that you can buy it.
Noted.
So,
and November.
And November. So it's quite an interesting representation of the data.
In fairness to February, it is handicapped by 2.5 days. Right.
Yeah. We'll give you that. We'll give you that.
Yeah. Just make sure February is properly represented here.
Okay. All right.
Should be
And,
7.35.
in this region, it does depend when the Lunar New Year falls. If it falls in February,
Indeed
it's
it
on
does.
That's a good point. Yeah.
I knew somebody would be along to help me help me just shine a bit of light on that. So awesome. Okay, let's dive in then to looking at some of these country markets. So we start with Japan, just because that was kind of first on the list. And we were sort of asking ourselves a question to try and tease out maybe what's happening there. So Japan is having a bit of a moment. It was pre-pandemic, there was a lot of strong growth in Chinese outbound travel to Japan. It was actually growing faster as a sort of market pair than China, Thailand, which is and was Thailand's largest tourism market. So Japan has certainly picked up the pace, I guess, again, in terms of its top 10 markets. What's quite interesting is that back in 2019, the top 10 international markets, which are listed here, accounted for 85% of Japan's total international capacity. That's actually gone up. So more concentration, less diversification to 88%. And you can see, there's sort of steady. Bottom one is South Korea, and then China, the orange one. So China's still important to Japan from a tourism perspective and business perspective. Chinese Taipei also strong. So kind of interesting to see the composition of the market from that perspective. But we can also see that, in the 10 years before growth really started in the international side, this is just international capacity. It was a fairly static market. There was a little bit of growth, but it took the introduction of low cost into the market to start serving those outbound populations from China, from across the region, who wanted to get to Japan to explore. So
they've not really penetrated the market as much as you see in other countries, particularly in international capacity, have they? I mean, obviously China, and we'll talk about why China has grown from or to Japan against or in the context of Thailand at the same time. But what I think you're seeing there is low-cost international capacity has probably grown as much as it is. But the thing that really surprised me about Japan is 83% of the capacity is based in and out of Tokyo and Osaka. And there's 63 plus airports across Japan with commercial air services this year. But many of them have limited international presence. And it's so heavily focused on those two cities and gateways, something that you don't see in many other markets. And, is it because the regional markets themselves are not big enough, or the airports are not trying to attract the airlines? I always think that the Incheon hub, now that it's in the hands of just one national airline, is an excellent location for many regional Japanese markets to flow through into North America and into China, indeed even into Europe. It's it just still has that conservative feel to it.
Yeah, interesting. I think what's quite interesting, and we looked at the growth rate between those regional airports and the major airports, and it has been faster, but it's from a really small base, isn't it, on the international side? So one to watch. Gary, have you been to Japan recently? Must be on your list of places that you've been to in the last 6 months or so.
I haven't been in the last 6 months, but I think your point, John, is an interesting one. I think when you look at the geographic positioning of Osaka and Tokyo, they're very well geographically positioned for short stay holidays. And, a lot of the market from Northeast Asia, Southeast Asia into Japan is short stay travel. People don't stay very, very long, and they want to go back to destinations where they're familiar with, or where they can get to other destinations very, very quickly. Those two are obviously key nodes on the high-speed rail networks as well. But I mean, if you look at the Japanese market overall in terms of visitor arrivals this year, it's up 21% year on year in the first 6 months of the year. 21.5 million arrivals. It's on target to hit 40 million arrivals for the first time this year. And Deirdre, you mentioned the Chinese market. The Chinese market is up 54% so far year on year in the first 6 months of the year, which is astonishing.
Incredible, isn't it?
That's lots of Gucci shopping and Prada shopping, isn't it?
There's some of that, but there's also the food. I mean, the food is a huge attraction for Chinese travelers. But actually, then the other key thing is actually it's pretty diverse. If you look at its top 20 visitor markets, all of them grew in double digits this year, except 3: South Korea, Hong Kong, and Vietnam. So you've got growth across all markets. And then you look at some of the smaller but growing markets. India is a good example, up 40% year on year. Russia is up 104% year on year, and the Middle East is up 54%. So there's every chance that it's not just about the Chinese market. This growth into Japan could continue. And, the rest of this year is going to be pretty strong. You'd imagine the Osaka World Expo is still going on until October. July is always a very strong market, strong month for the Japanese market. I think it's the third strongest month of the year.
And the yen is relatively weak. And, what I think is surprising is when you look at those numbers, that the European market is still really difficult to access because of the lack of Russian overflights. And yet Japan still continues to show growth as well.
Yeah. But going back to Deirdre's initial point about the markets, I think it's 4 key markets actually comprise almost 2/3 of visitor arrivals. So South Korea, China, Taiwan, and Hong Kong, they account for 65% of all arrivals in the first half year. So it is a very, very strong regional market.
Yeah, having been twice before, I can't wait to go back. It's definitely it's a fascinating.
You might get on the right train as well, might you? This time, Deirdre?
It's like you said, it's having that moment. It is just the global appeal, the regional appeal, especially from Asia, but globally the appeal of Japan at the moment. And the yen, yes, has some impact, particularly from the value-conscious markets. But generally, Japan is just the it girl at the moment. It's just the place people want to travel to.
Yeah. And it's a bucket list destination, isn't it? I can think of anecdotally loads of people who have it on their must-see places to go. And
and I think it sort of elevated up that bucket list during the pandemic. I think that appeal of the nature,
because it was closed, wasn't it? It was like the mystique of what is this place?
Yeah, sure. Okay, stepping a little further south then. I'll go back to the slide deck for a moment. So we pulled out some headlines on Southeast Asia. And this was really triggered by a report that comes out every week from our friend and your colleague, Gary Hanna-Pearson, who puts out a report periodically on arrivals data. And this was earlier this week, and it was the half-year international arrivals data for the Southeast Asia countries. So what we thought would be interesting to do would be to look at, well, how does that stack up against capacity growth? On the left, we've got the capacity data for the main markets in Southeast Asia, and then the associated growth. So you can see some strong performance, Vietnam up 16%, and this is first half of the year versus first half of the year last year, and then the associated percentage growth. So, Malaysia 10% also strong, Cambodia particularly strong, although maybe impacted by current events that we'll talk about shortly. So some strong growth. However, we're not seeing that translate into visitor arrivals, international arrivals. So Thailand in particular, capacity is up 7%, but visitor arrivals are down 5%. That might give an indication of some of the challenges there. Philippines is lagging, down -1.2%. However, Vietnam actually outperforming capacity growth. So theoretically, the planes are getting fuller. 21% year-on-year arrivals growth versus what do we say, 16% capacity. So some interesting things there, Gary, kind of going on really.
I think all three of those graphs really show what a mixed picture it's been in the 6 months across the region. And that goes across airlines, that goes across hotels, that goes across visitor arrivals, tours and experiences, consumer spending, economic performance, all of those things. It's been a very, very mixed first half of the year. And I think the reality of that is starting to kick in across the region in the travel industry. You know, we had this period, it's unfashionable to talk about the pandemic, but the long closures here were so disastrous for all segments of economies, but particularly the travel segments between 2021, 2022. And if you're in China, 2020, 21 and 2022 in China as well. And then we've had this 2-year period of sort of recalibration. We had an initial surge where there was strong travel recovery. That tended to taper off a little bit. And I think the first 6 months of this year, we've gone back to reality. You know, we really are in the middle part of the decade. We're almost at the end of the first quarter of the century. But I think a lot of those post-COVID, the cost of COVID, really, the cost of government borrowing, the cost of living is rising, taxes are going up. There's a lot of factors that's actually impacting on the way consumers think right now, which is a little bit different to a year or 2 years ago where, you know, there was a degree of price elasticity. People needed to travel. They needed to reconnect. They needed to do business deals. They needed to travel again. You know, that urgency has disappeared. The frequency of travel has gone. And you're seeing some real consternation in some of these markets. You mentioned Thailand. I think Singapore is having a few concerns as well. That growth that was expected just isn't materializing.
So you have a softening of demand in Asia, however noticeable, and at the same time, some of the supply chain issues that were affecting Asia are easing, and more aircraft are coming back into fleets, and there's more flying. And you've got AirAsia, of course, who, you know, have been the reincarnation of Tony Fernandez's business, etc., etc. There's going to be more capacity coming in. I mean, that's not a great recipe for average fares, or indeed for airline profitability. So is that something we're going to have to watch in the rest of this year and beyond, precisely how strong the Asian carriers are, and particularly, you know, those smaller point-to-point carriers who maybe are in the low-cost market and don't have mass.
Absolutely. I think you're absolutely right. Obviously, we have the huge airport capacity in growth as well over the next few years. But you're right in terms of AirAsia. I mean, AirAsia is still talking about having a Hong Kong IPO. You'd probably think that's not likely to happen anytime soon because that restructure is going to take time. And also, is it right to go to IPO right now?
Yeah, and he's talking about creating a base in the Middle East. I mean, I can tell him there's a base in Abu Dhabi if he's interested. I mean, that's
it was only a matter of time before that
couldn't resist that one. I mean, take your own bucket.
I would say, John, I think everything that you said in terms of the market conditions are absolutely right. And I think to some degree, we would expect to be going back to a situation right now where there is no upward curves, where things are tricky and you have good months and you have bad months and you have the normal economics of travel once again, not the post-COVID economics of travel. But I think there is consternation that economic times could get a little bit tougher over the next 6 months, particularly in this region.
Yeah,
and that would impact the frequency of travel.
Courtney and I yesterday were commenting on the Indonesian market, which just seems, you know, bizarre. I mean, Deirdre and I have done some work there where, quite frankly, it's cheaper to park your aircraft on the ground than it is to take a domestic airfare of about $20. And, you know, that's an airline that has literally hundreds of aircraft on order. And if things don't improve, it's going to wonder what on earth it's going to do with those aircraft because they're just sitting there.
You and I have discussed this as well, John, is that one of the mismatches that you have is that these are big distances that you're flying in Indonesia, and to make the price affordable for the airlines, is very, very different to making the price affordable for very, very value conscious travelers. There's a huge mismatch in the consumer ability to pay and what the airlines need to achieve. And Indonesia, I think, is probably the biggest example of that in Southeast Asia.
I think you used the word bizarre, John, and I think that's quite interesting, because when I look at Southeast Asia in particular, the question I ask myself is, what is normal? Is the growth that we saw in the 2010s normal? Is Lion Air ordering all the airplanes plus one normal? Or is this not just the new normal, but what was bizarre? And the stark difference between Indonesia and, say, Vietnam right now is quite fascinating. I mean, we were talking about just Indonesia as a country has, what did we say, 300 million people, the geographic span of the continental US, right? And with no option to drive, right? So the idea of air travel from the long-term perspective is there, but like you said, the economics are not. So the bifurcation between countries like Indonesia and Vietnam right now really begs the question, well, which one is normal?
Yeah.
Are we kind of in a post-modern?
No, I don't think we are. I think that's a really valid point, because I agree with you that 2013 through 2019 wasn't normal. It was an unusual outlier growth period. But I think if there had been, and you can't really say this, but I'm going to say it anyway, if there had been no COVID, I think things would have shaken down. I think we would have had that period where over those 5 years where we've seen just this down and then back up again, you would have seen markets respond, perhaps not in a normalized way, but we would have seen a bit more of a shakedown, and that hasn't happened. And so I think that's where we're at.
I think two things. Sorry, John. Two things I want to, because this is really timely with what we have on one of our slide decks. Not just, so we're obviously looking at international markets in some of these contexts, but look at the domestic market. Exactly illustrates what we're saying about Indonesia. You can't say, really, I don't think that 2019 was normal, when the position today domestically in Indonesia is that capacity is down 22%. That's the big alarm bell right there, I guess. Similarly,
sometimes this is driven by government sentiment and trying to appease the population base. And in Indonesia in 2019, it was very much about, let's join everyone together. Let's encourage airlines to put really cheap fares in the market, and hope the market responds. And it didn't. And they're now living with the consequences of that. And I think the most alarming thing is, will the president of the Philippines be returning back to Manila at the end of this week, having been in the United States? He went there with a tariff rate of 17%. He was threatened with a rate of 20%, and he's secured a rate of 19%. Strikes me as, that's not a great deal, mate. Even I could negotiate a little bit better than that. But
I think that, I take your point. Going back to Indonesia, the problem this year is just austerity. The government has overborrowed, have a new president who has a very, very different perspective on the economy, and he's just slashed all government funding. So there's just no funding for government travel, which is a huge part of the domestic travel market. Going to the Philippines, I don't want to get too much into tariffs, but the Philippines doesn't have much to offer the US in terms of its negotiation. Vietnam does. You could argue that Indonesia does, because Indonesia has the minerals, the rare earths. You could argue that Thailand, perhaps, maybe Malaysia, maybe, but Vietnam and Indonesia are the strongest. That's why they've done the deals first, and Japan also. But the Philippines just has no leverage. It has no marketing, no position really to bring that tariff rate down.
And is extremely US dependent.
Yeah.
I think
all this talk about tariffs, I just want to remind everybody that of all the people on the call, the only person who will be paying said tariffs is this year. You're welcome.
Well, we feel your pain.
It won't be just you, but it will be expensive. But the thing about Indonesia, if you look at it, actually should be a really strong market, because unlike many other markets in Southeast Asia, it has a very large religious travel demand that reoccurs every year. and is always there. And it has diaspora all around the world that want to travel back, and family ties are very important. And it's got potential to trade. It just seems
yeah,
and
it does. But also going back to Courtney's point about the unrealistic growth that we saw in the last decade, at some point that's going to bottom out and top out, and that's just what's happening.
And that's exactly what we're seeing. So, timely to look at. We were kind of curious, more in the context of Vietnam, I guess, that if we look at the trajectory of growth over the last 25 years for Vietnam, how does that compare to what we've seen in Indonesia, as an example, and in India? In terms of both of those markets, you've seen boom and bust before we've got to a kind of more stable position. But you can see, what jumps out of this chart for me is Indonesia absolutely nowhere near where it was previously, whereas India, massive impact from COVID, but kind of back on track, strong growth, economy continuing, finally feeling like a market where there's stability. You mentioned yourself, Gary, Japan's seeing strong growth from India. We're seeing strong growth from capacity growth from India to Thailand. So, that the sort of much hyped future of the Indian outbound tourist is slowly starting to come to fruition. And you can see for Indonesia, have they shaken off the past? Was that, should growth really have happened more like Vietnam in a more sort of organic, steadier way, and then maybe we'd be on a more stable path today? You could almost track those periods of activity, I think, with political changes every 5 years or so, couldn't you?
Yeah, I think you could. I think that the other issue for Indonesia is it's very, very hard to consistently grow a country of that size and that population. You're going to have peaks and troughs. 285 million people. Whereas you look at Vietnam, Vietnam's 100 million people, but it's part of mainland Southeast Asia. It's geographically positioned slightly differently to Indonesia. There are other factors that play into this, but you're right. Indonesia has ambitions to be the world's third largest economy by 2045, and at the moment that trajectory just isn't happening. It could regrow again. It does have minerals. It has natural minerals, which over the next period of growth, when we electrify the global economy even more so, they're going to be even more important.
Yeah, I mean, there are islands within Indonesia where there are major US companies with established bases and locations already taking advantage of that. So,
and China,
it is, but it is the growing pains of emergent markets, isn't it? It happens in nearly every market.
Yeah. So Vietnam, then, Vietnam's having a moment. Lots of places having a moment, but Vietnam in particular is, it's quite interesting actually, because this is a very positive story here. On the left, this is just capacity broken down by domestic and international. I guess looking at this in the context of others, it's a bit steadier, isn't it? And we're still not. It's taken a long time to recover. There's been a bit of shakeout in the market, both domestically, as we can see there, impacted by supply chain issues and engine issues. But are we going to see sustained growth carry on for Vietnam, do we think? A lot of investment happening, airport infrastructure.
Is there a bit of are we going to see a burst in low-cost capacity? I was reading yesterday that Vietjet have a major outstanding refinancing or payment issue with one of their lessors that they've not paid for many, many months. So could we see a capacity shakedown in the low-cost capacity in the next year and a half? I don't know. But, on the face of it, it looks very good, doesn't it? You've got more than 100 million seats per annum, and you've got a population, as Courtney said, of about 100 million. I mean, that's the propensity to fly of one in an emergent market. That's very high. That is very high.
Yeah, I think, sorry to be negative here, but the annual GDP growth has been very, very strong and was projected to be very, very strong for the next 2 or 3 years until this year, when you can see that, that a lot of those tariffs are designed not just to contain China, but designed to contain Vietnam as well, because a lot of the transshipment and a lot of the manufacturing from China has moved to Vietnam. So a growth slowdown in the economy there would impact travel, no doubt.
Yeah, and an original tariff.
But interestingly, is it
46%?
Is it a major competitor in the leisure market for inbound European travellers in the next 5 years compared to Thailand? Is it the next Thailand?
Well, you see, I think my
Possibly,
sense
yes.
is that Japan is the next Thailand. I think Vietnam was on the place that everybody was talking about in 2019. It was hugely popular for Western tourists, I think, then. Is it back up that list of popular places to go? It's not, if you look at all the anecdotal
it depends how the
noise.
infrastructure improves, which it looks as though they are investing in quite a lot of that. There's a lot that Vietnam has to offer, which is different to Japan. They are very, very different markets. If you compare two countries, Thailand and Vietnam are much more comparable. If you want to go to Japan, you'll want to go to Japan. If you want to go to Vietnam or Thailand, you would choose between those two countries. So I think inbound Vietnam will be very strong. Yeah, whether it can compete with Japan, probably not. But certainly in Southeast Asia, it has everything that Thailand has. Thailand has a lot of problems in terms of rising costs there. A lot of Chinese travelers say that that Thailand is just not as cheap, as good value as it used to be, and that's a big issue.
And that's a question. Nicely segued, Gary, into our next slide. Is this the end of China's love affair with Thailand? We were sort of slightly alarmed to see when we looked at capacity for this summer versus last year and 2019 that there's a stark reduction in Chinese capacity, so 45% down still on 2019, and unapologetically comparing to 2019, by the way. Just thought I'd put that out there. But also perhaps more worryingly, 20% fall in capacity compared to last summer, which sort of suggests that there's a real shift happening.
That's the more impactful comparison. I think that's
absolutely.
Yeah.
I think though what was interesting is when we then look to the other side of the story, that there's actually growth that's offsetting those reductions in capacity terms anyway. India, as we kind of referenced, significant increase in capacity. Vietnam, Thailand, a bit of growth from some of the other markets. UAE, significant increase, and then there's growth across a whole range of other markets as well. So Thailand's doing something right in terms
of if it was a deliberate strategy to diversify away from China, then and build your other markets. You could argue actually you've done quite well, guys. You're going in the right direction. You've lost more Chinese than you probably wanted to in the last 12 months, but you're doing it. Whether and that's a great question. And the tourist board will tell you it's a deliberate strategy. I'm sure that's
I agree with you. I think if you look at the first 6 months of the year, overall visitor arrivals were down about 5%. The Chinese market was down over 30%. So it is accumulating visitors from other markets, definitely. I think going back to Kurtner's point, I think this is the baseline reference point that we go back to, is that 2019 was a freak year. It had 11 million Chinese travelers into Thailand. Maybe would have never have had that again. Maybe that would never have happened again, and it certainly is looking very unlikely.
Or is this a sign of increased Chinese consumer wealth and disposable income, in as much as they no longer go to Thailand to get a fake Gucci bag, but they go to Tokyo to get a genuine Gucci bag?
I think it's a dispersal of the market. I think the Chinese market has changed. More people want to go to different places. It's almost like when I was growing up in Europe, you wanted to go to Spain as your first destination, then you move on and go to other places. And I think Thailand was very much like that.
And it'll always be there, won't it? The familiarity. It's a known quantity, isn't it? And actually, sometimes that's to a destination's advantage, sometimes it's not, depending on sentiment and all of the other behaviours around how people choose to travel.
But
and where they
it
want
is
to go.
interesting as well, Gary. You were saying about, perception for the Chinese traveller is that Thailand's becoming expensive. However expensive Thailand is, to go to Tokyo is also an expensive trip.
True, but it's expected. It's expected.
Yeah.
I mean, people know what they're going to pay if they go there.
Okay, let's go finally to the US. We can't. It's the elephant in the room, Courtney. We can't not talk about it. No, I'm being slightly naughty there.
It used to be the donkey in the room. Now it's the elephant.
Okay,
for the next
well,
4
yeah, is
years,
that
yeah.
better or worse? I don't know. Okay, so we've taken a look at, we've obviously talked a little bit there about tariffs. We sort of wanted to just take a quick look at US capacity, domestic and international. So pretty static on the domestic front, just 0.8% increase for the summer season compared to last year. And then international, because we know, there's lots of, certainly a lot of growth in air service between the US and Europe. And indeed parts of Africa, North Africa and beyond. It's not a surprise to see relatively stronger growth on international. But it's a mixed story, isn't it? It's this is not a uniform. Everybody's keeping their capacity discipline.
Yeah, Courtney,
I'm
I'm perplexed. First quarter earnings reports from all the big US carriers. Can't give you guidance to the year end, etc. World doesn't look great. Bit of demand softening. 2 weeks ago, things are a lot better than anyone expected. What's happened in 3 months to change their perceptions?
Literally 12 minutes ago, my newsletter published talking about this, right? While we were I was fiercely typing. Look, I think it's as simple and as stupid as the stock market went up. Especially when we look at those, which airlines were up and which airlines were down. It's all about premium travel in the US right now. But we saw a real dip. We saw some real concern earlier this spring. And we talked about this yesterday. If you look at the premium traveler, they are increasingly newly retired people who are looking to spend those premium dollars. They're also probably more exposed to the wealth of their wealth being in the stock market. When you saw stocks take a hit, you saw some real concern about yields. Since then, hey, everything's great. Right. Stock market's back up to all-time highs. I think what's so interesting, just for me as I geek out on this, the stock market is not an indication of the economy. Clearly, we have some real serious downward trends in economic numbers in the United States. Right. And they continue to keep coming in bit by bit. Jobs, housing, basically all the things that you would start to grow concerned about. And yet we're hearing premium is moving a little closer, to the stock market. And so when you look at that chart that Deidre had up, you can very clearly see the airlines that are adding capacity and those that are taking it away. United wants all the airplanes. Delta is adding capacity, and American's trying very hard to add capacity with what they have. So there are your haves right now on the premium side. Everybody else, except for Allegiant, and I'll put Alaska in a unique category there because they're kind of flat coming into this fall. Allegiant is up, but based off of pretty stagnant growth the last couple of years. So they're kind of restarting that growth. Everybody else is down. Right. So we're seeing the bifurcation. Southwest earnings are just out this morning. This is fascinating to me because they're right in the middle of everything. They are that market. They spread everything. Yes, business. I mean, probably, not first class clearly, but, they are sitting right in the middle of the market. Southwest reported their revenue is down a point on costs that are up a point. Put into different terms, RASK, the revenue that they're bringing in per seat, RASM, was down 3% year over year. CASM, ex-fuel, because fuel is cheaper, CASM was up 4.6%.
Oh,
right. So total revenue passengers carried down 5%. This is for Southwest for Q2. This is a strong quarter. They made money. I think profits were down in the 30 to 40% range, whatever. That's profits. But you are seeing numbers that are not going the right way. However, yield was up 2%. I'm looking through their release here. Yield's up 2%. RASM's down 3%. Right? So they're trying to squeeze more yield out of the passengers they have on flat capacity, and yet still it's net negative. That to me is very interesting into how the US is playing right now, domestic versus international. There's a point of sale component that's really kind of interesting. We've seen this, really from the start of the tariff talks earlier this winter. Travel from Canada is significantly down, but transborder traffic is not necessarily, because depending on the season, you have Americans still going north. You just have fewer Canadians coming south. That's impactful. We're seeing the same on the southern border. It's just that, the number of Mexicans coming north to visit family, to vacation, whatever, in the United States is down, as you kind of would expect. The problem in the overall numbers is the Americans going south just swamp that market, right? So there's a point of sale difference that we're also seeing across the Atlantic to much smaller numbers. It's fascinating market.
Courtney, do they reference in that latest earnings the benefit or disbenefit from charging for baggage? Do they know how much revenue they've generated from baggage, and now they're just about to start charging for pre-seat assignment, aren't they? So those are below the line type ancillary revenues that can make a big difference to an airline of Southwest size.
It's so they just published it this morning. So I did the consultant Control F and search for bags.
Yeah.
And at the top of their earnings release, they say, they launched bag fees with actually this came out yesterday. They launched bag fees with financial benefit exceeding expectations, whatever that means, and no negative operational impact. So they could, but I don't see it at the top.
It's interesting though, because it's exactly what you say. They sit in the middle of the portfolio of US airlines.
Yeah.
But is there actually a middle ground, or is that ultimately a really dangerous place to be? And should they be more obsessed with cost?
Great question.
And getting their cost base lower as much as they possibly can, rather than worrying about a bit of a premium thrill?
Well, that depends on. And that depends on what the objective for that specific company is now. That's kind of oddly under new ownership, but not really, but still kind of. What their objective is, and that's a longer conversation for a different day. But I put JetBlue squarely in this category as well, right? Don't call them. They used to be the low fare kind of bucket. Well, you've got Spirit, Frontier, Allegiant, and the ultra low cost. Sun Country, their capacity is way down. Passenger capacity is way down. But you've got Southwest, JetBlue in that middle section. Are they able to play both sides of the field, or are they a jack of all trades, master of none type of thing? That's kind of interesting. And that's really the way the US market is playing out now. I think especially in the context of Southeast Asia, I think what I find so interesting about that market in relation to the US is I see these numbers in these year over year comparisons, and they look like what we saw in the US about a year and a half to 2 years ago, simply
Yeah.
because of the trajectory of the COVID recovery. And
Yeah.
I remember everybody saying, hey, look, these are year-over-year comparisons. It's year-over-year COVID comparisons, but still revenue management teams were throwing parties. Look how great we are, right? And then the next year, once we saw, and this is where Southeast Asia feels like it has recovered or will very shortly. And when you go from that recovery rate to probably overshooting, because we're aviation, we overshoot what we do. There's a freak out period. The US is a year past that freak out period. We saw that last year. I suspect Southeast Asia will kind of go through that as well. I think just with exaggerated, because it's just a higher growth region. We're seeing those types of, I mean, we talked about Vietnam. Yeah, Indonesia is having their freak out period, clearly. So I see that.
I think that's a really good point, Courtney. I think the only slight difference I would say, I mean, I absolutely agree with everything that you've said, is just the conditions globally right now for that freak out period to happen in Southeast Asia are different than they were a year ago when the US
very
had
true.
it. Yeah.
Very true. Yeah, that's
truly-
also adding to that the volatility of said freak out, whatever that is.
We're in uncharted waters, aren't we?
I did a piece on JetBlue a couple of weeks ago, and it went up as an OAG blog, saying where are they and where are they going. But it seems like it's the dreaded C moment in the US market, isn't it? And it's about, is it collapse or consolidation somewhere?
So consolidation is a great, and it's a really interesting term, because at some point we're running out of ways to consolidate. I mean, we had a really good opportunity, and then somehow some judge was like, I'm fighting for you, Spirit passengers, and then kind of
what happened to Spirit? Yeah.
But whatever, right? So that consolidation didn't happen. Now, again, that's judge dependent, but I think when we talk about consolidation in the US right now, I think the better term is probably, Dara, I can't believe I'm going to say this, but capacity discipline. That's where we're seeing now. Oddly, who has the capacity discipline today? It's that mid-tier market. Sure, the low cost, the ultra low cost guys, Spirit, Frontier, are reducing capacity, and it's kind of because they have to. I wouldn't necessarily call that discipline, but they are. It's Southwest, it's JetBlue. Oddly enough, Alaska coming into this fall is pretty flat. The ones who are pedal to the metal, I just want to keep growing. I mean, look, it's United. They truly, I mean, they I don't want to call it dumping the market, because they're doing it very profitably, but they are full bore ahead, add all the seats. And I think for good reason. I don't think that's the wrong thing to do. But I do think there's a cyclical nature to this.
And isn't this a function of, fundamentally how markets behave? If you're not the top 3 players in a market with that sort of appropriate share of the market, there's always going to be churn and challenge, and however that manifests as capacity discipline or consolidation or whatever, all the C's. I'm feeling a webinar title coming on, So I think for those guys, if you're not the biggest and you're not the smallest, you're always in the middle. It's like being the middle child, trying to fight for attention, fight for what you can carve out, and how do you differentiate yourself from, you haven't got the deepest pockets, you haven't got the lowest cost base, you're in that middle zone. And I think that's a challenging place to be. And I think we don't see, to take the parallel back to Southeast Asia and the Asian markets, we don't see that kind of drama so much because it's an emerging market, and there's a kind of groundswell of growth that's happening because of the economic position being different, I guess.
And we talked about this yesterday, and John, I think we were talking pretty heavily about Ryanair's success. at riding through the waves. And I've long said this: Ryanair's success, in my opinion, is keeping costs low and not having to grow in order to do it. But I think there's another element to that really applies to the US, and that is, keep costs low or find some other way to subsidize them. Right. So for the low cost carriers, it was growth. It was ancillary. Like, be an airline so you can figure out how you're going to make money. Low cost carriers, it was ancillary fees during that growth. Yeah. Today, it's throw out capacity so that I can earn all my profits and loyalty. Right. Be an airline, move people, and lose as little as you can doing that so that you can make money somewhere else. Now consider Southwest, JetBlue in that equation. They're not loyalty players. They're actually just running a good airline. Gasp, right?
That's not enough. Is that enough?
Right. Yeah.
Yeah.
Yeah. Fascinating. And of course, the benefit for Ryanair is there's always a new market to get into. I mean, they can't wait for the Ukraine to open again, whereas the US and particularly US domestic market is pretty constrained in its size.
Where else can you go?
Yeah.
And Wizz Air is you have to really kind of mention Wizz Air. I think there's some concern that Wizz Air, them closing Abu Dhabi and their challenges suggest kind of the spread of the low cost disease from North America into Europe. I'm not quite convinced that's the case yet. But again, here's an airline that has not succeeded without massive growth, right? So they need to figure out how to do that, but I'm not convinced that that's anything necessarily systemic in that market like we're seeing in the US.
Yeah. Okay, let's in our last 3 minutes, let's come back to the deck. We pulled out some average fare data for the US, top 10 country markets, and then top 10 city pairs. And I guess this probably reflects what we've been talking about. Certainly here in terms of the range of different things that are happening. And I guess what we're seeing on the international side is airlines taking advantage of the strong demand for travel to all parts of Western Europe.
Yeah, it's this is data from Infest, so it's actually what airlines are selling out in the market at this moment in time. So it's pretty fresh. I think for me, what it shows is, despite what people say about the US market softening and it's struggling, average fares certainly on the key markets are higher than they were this time last year. Be that because people are looking for a bit more premium. Don't know how you define premium because that's different for everyone else. And the international, some of them are struggling to keep that demand going and are having to stimulate by lowering fares. So that's interesting. I guess also there's a bit of a currency movement with the US dollar finally weakening by a few percentage points year on year.
Yeah, I mean, it lines up, even though it looks like they're moving in opposite directions. It definitely lines up, right? We have capacity largely flat and fares increasing in some of those markets. Yeah, that's kind of what you would expect, especially corporate travel. If you believe the airlines is not quite back yet. There's some shift to what companies call corporate travel, but whatever. There's growth there. So those kind of key business markets, which by the way are owned, the share profile for the Fortress carriers in those markets is just that much higher, and their pricing power is that much higher.
And in Asia, Deirdre?
So here we've got the key markets, so country to country, average fares, and the associated changes, quite a bit more variation than we saw in the US market, I guess reflecting perhaps some of what we've been talking about. And then you've got some key city pairs here as well, in terms of...
I mean, I knew it was cheap and I knew there was a lot of capacity on it, and far too much capacity. But I never realised that the KL Singapore average airfare had slumped to $30 one way. I mean, how does anyone make money on that sector? It's beyond me. I mean, obviously, a lot of people pay a lot more, and some maybe even a little bit less. But that's incredible.
Yeah, it is. I agree. I mean, I think you just look at that whole deck, and there's just such a mixed picture. Such a mixed picture.
But it's also cheaper to fly Indonesia, Singapore, almost anywhere than it is to fly non-stop from Jakarta.
Yeah, absolutely. But then you look at fare prices in China, for example, and it's such a deflated market. It doesn't have inflation like we have in the rest of the world, really. Just such a very, very confusing 6 months, I think, that we've gone through, and whether that adds any clarity to the next 6 months, I'm not entirely sure.
Well, I think that's the burning question, Gary, isn't it? One of our audience has sort of asked exactly that. Where will things stand 6 months from now? Winter in America, summer in Southeast Asia. As a parting shot, anybody want to volunteer any predictions on what's going to happen?
I think certainly in this period, everybody is hoping to move from a period of uncertainty to adjustment. If these tariff deals are actually going to stand, if they are what is said that they are, then everybody's going to have to get on with it and deal with the fact that economic terms have changed. But what happens when Trump has got the deals that he wants and then he gets bored again? What happens? We really don't know. And I think that's where just this whole level of deliberate uncertainty into economies hurts emerging economies more than any others.
Yeah, I think that's the last 6 months has told us one thing about the next 6 months, and that's who knows. And as a consultant who's paid to say what they know, it's not good for business. But right, like volatility,
it's great for business.
Yeah, well, that's a good point. There's that too. I didn't want to say that part out loud, John.
I'll do it for you.
But anytime volatility, uncertainty, like that in itself moves itself in a direction. From a U.S. perspective, again, we're the ones paying all these damn tariffs. From a U.S. perspective and from the U.S. economic perspective, there's a lot of pessimistic signs. However, these are economic fundamentals. The momentum is very, very strong, right? We are mid-cycle, and this spreads to the global market. So while we are dealing with record levels of uncertainty, ex-COVID, the only logical conclusion you can make is that things will just kind of stay the same with a wide area of possibility. But the momentum of economies of the air travel market is a thing, and it's very strong. And so that would be my kind of take, is we'll just kind of see more of the same. We'll probably be talking about uncertainty for the next 6 months. Looking at numbers very similar to the ones we're looking at today would be my guess.
Yeah, I agree. I mean, look, this industry has survived for 100 years on uncertainty. Another 6 months.
Knock on wood.
Okay, listen, I think we're going to have to wrap it up there. We've gone over slightly a little, and I feel that we could have carried on the conversation for quite a lot longer. Thank you so much to our panel for your fascinating insights, engaging discussion, etc., etc. It's been a pleasure as always. So thank you to you all for that. We'll be back. We're taking not all of us, but the webinar is taking a summer holiday. So we won't be running one in August, but we'll be back in September. And in the meantime, please, if you don't already, feel free to sign up to OAG's blog, where you can read more insights of the sorts of things that we're discussing today. We'll also be sending out a copy of a recording of the webinar and the slide deck later on to everybody who signed up. So thank you all for your engagement and for joining us, and we look forward to seeing you on the next one. Thanks, everyone.
Thank you.
Thanks, everyone.
Cheers. Bye.